Hello, fellow traders. 'Tis I, TheRumpledOne, coming to you Friday, January the 26th. The year's 2024. Let's talk trading. Weekly wrap-up. These videos are for educational purposes only. Your results may differ from mine. So, it's almost the end of January. We're ending 4 full weeks of trading so far. We've got 3 trading days next week, but let's just remember risk management. Don't lose any more in any one single trade than you're willing to lose. In other words, use your stop losses, traders. Okay, we're talking about the weekly wrap up, and first thing we can see, all those gaps have filled, and the pound is 12 pips above the weekly open, 62 off the high and 64 off the low, almost at the weekly midpoint. We zoom out to the monthly and we can see we're 8 pips below that monthly open. That 2720 number has just been a lot of action this week, a whole lot of action. 73 off of the high and 116 off of the low. Looking at the daily, you can see the range for the month. We're inside that range. We're inside the range for the week. And you can see we're below that monthly open, but above the weekly, kind of a no man's land. And you can see what we've done here. You know, Monday, Tuesday, Wednesday, Thursday, Friday. We've just been crisscrossing. Kind of stuck in this range. So we'll have to see what happens next week if we break out for the month, or if we stay stuck in it. And one of the things, you know, we talk about price action, and one of the things I want to try and go over here, you know, if you look at this price action and look at what the chart is telling you as opposed to looking for, you can see here all these wicks. Price is saying, you know what, we got a bunch of sellers here, and then all these wicks, we got a bunch of buyers here. In fact, in that one day, I can't remember, one day this week, I had mentioned that price looks like it needed to go down because there's more buyers down there. It had news, it went down, then it went up. Well, hey, and you know, that happened to play out. And looking at the yearly, which is pretty much the same as the monthly, you know, 9.2 pips above the yearly open, 9 pips here, don't have any decimals. We had an inside bar yesterday. We broke out of either end. Let's see. How many pips to the upside? Looks like about 16 pips to the upside. And to the downside, about 6 pips. So once again, taking those trades at these horizontal lines can be profitable. And then, you know, just look at the days here. It's like we don't want to, seems like we don't want to get below that 2600 or even get near it. And then we don't want to really get too much higher than 28. So just a lot of movement. And one of the questions as a trader you have to figure out is, are you good at picking direction? Are you good at saying, well, the market's going this way? And a lot of times, you know, like I say, I'll enter a trade, and as soon as I enter, will inflect on me and go the opposite way. So you have to look and see what it is you think you are seeing that makes you choose one direction over the other. But sometimes it's just as simple as, you know, price getting in a wick zone, price leaving a wick zone. For the range today, we had red news, I believe, only 83 pips. We got 5 pairs over. But you can see how price is just, you know, pretty much compressing. And once again, it's almost always closing inside the candle body. As I've said it more than once, price doesn't like to stay in the wick zones. And you can see here, we got our daily open, weekly open. Price touched the daily, broke through, and it went back the other way. Now we're heading back down. And right here we can see we had a push to the downside, push to the upside, failed to make a new high, and then all of a sudden price went down. So you can see here, it made a new high, close below that high. So then you just look for a shorting opportunity here. I mean, you could have just taken the short from the get-go. You drew some heat to stop above here, and then you just look for that short. And then, of course, here you had the psychological 50 level. So that'd be a good place to even think short, even though that candle was green at the time. But that's just, you know, how I interpret the charts, and sometimes they play out and sometimes they don't. I mean, here's another case where you had it made a lower low, but it closed above the previous low. You go long, might have been good for a pip or two. But then if you tried to, you know, go for a swing for the fences, you know, go for the big pips, you would have been sitting in drawdown right here. And red rats are feasting, as you can see here. You know, this is the M15 chart. Once again, you know, it made a higher high, closed below. You had a chance to make a few pips, then higher high, closed below the previous high. Had a chance to, right here, you can see it. It might have barely broke it or just touched it. Once again, that 50 line didn't close above the 50, and that trade was there to be offered. And if you shorted at 50, you might have had somewhere between an 8 and 10 pip stop to see if you were wrong. And if you were right, you'd be up, you know, 30, 40 pips if you rode that. And that's a hard thing. When do you choose to ride? When don't you? Bambino Flex indicator here says negative. Short at the pivot point. Short at R1. That short paid off. And long at S1, you can see here it came down, penetrated S1, yesterday's low, and then turned right back around. So once again, just using something as simple as this little trading plan indicator, which for those of you who may be new, it's just a TRO pivot trading plan. It's one of the ones you can download, no donation required, and just follow it if you want. Speaking about pivots, we took out today's, we took out the week, we took out the month, and on H4 we have this open pivot here, and we've got an open pivot all the way down here, and there's some other open pivots. So you can see today we've got two open pivots, wondering which one's going to get taken out first. As I've mentioned a few times already, in and out of that wick zone. Price just doesn't like staying in the wick zone. And looking at the smart range, we only had 126 pips so far this week, down at the 8th percentile. High minus previous high 10. We did not break out of the low. Okay, so for the red rats, high minus close 64. Green rats, close minus low 62. Weekly open crossover traders, 74 to the north and 52 to the south. So once again, these simple horizontal lines, you just have to take your pips when they present themselves. Or, you know, one of the things you can do is if you have an account where you can literally let a trade go against you 100 pips. So let's say you've got a $1,000 account and you put on one, you could even do one mini lot, but that would be a 10% risk. But you could do a micro lot, or, you know, and let it go against you 100 pips, thinking that maybe it'll swing back the other way. Yeah, that's more of a gamble, let's say. But if you look at the way price oscillates, you know, if you can catch it when it's range bound, you know, those types of trades can pay off. But if the sucker takes off to the moon, or, you know, craters on you, you could be left holding the bag. You don't want that to happen. So once again, looking at price action, simple. Candle color at maybe the psychological lines. And as you can see here, green at the line, paid off. Green at the line, paid off. Previous day's high, green at the line, paid off. Red at the line, paid off. It's just can be very, very simple. Looking at the highest low and lowest high here at M1, once again, that paid off, and the low one, that paid off for a few pips. Just looking to get a couple of pips on these types of trades. Not looking to take it to the moon. And then I've made a real simple template this week. When you don't have a lot of time to sit in front of the screen and trade, you can just look at price, and you can see how price challenged the previous day's close, the previous day's high, and the previous day's low. Once again, you can look to take the breakout. I'm looking at H4 candles, by the way, and you just, once again, candle color at the line, and you can see here, failed to make a new high. That H4 turned bearish, and then the rest is history. It's 30 pips below the previous day's high. And for the month, we've only got an ATR percent of 43. That's a really weak start. In fact, if we finish with that, that's going to be the weakest January from an ATR percentage in the last 20 years. So something to be mindful of. 189 pips. We don't even have a January under 300 pips. So this could be telling us something. What? I'm not sure. But you would think that there would probably be an explosion sometime in the next month. Today looks like an outside bar because we broke the previous day's high and low. And looking at the daily, you can see we've crossed above the previous midpoint. Zoom out to the weekly. Buyers are strong control. We've got higher low, higher high. But for the month, we've got a lower high and a higher low. So inside bar on the month. So, fellow traders, Walmart and I did a bunch of trading videos because that's what some of you wanted to hear. So let me know if you've got any topics that you want us to take on. We kind of figured, some of you said, hey, let's see some more trading and I guess a little less of the philosophy, the mental game, even though, it's all important, the trading, the mental game. In fact, Walmart, maybe I can get him to talk about his day-to-day, which wasn't a normal day for him, but there's a lot going on. So hopefully in your trading you have a little smoother sailing. And I'm going to wish all you traders out there fun and safe weekend. Stay dry, stay warm. We're still getting rain here on the southern Oregon coast, to be expected. So, fellow traders, when you come back and you're trading, I want you to always remember and never forget, it's not what you trade, it's how you trade it. So go out there and drain the banks. This is the Rumpled One, over and out.